When we sell something, very often it's going to be our entire stake. I mean, we don't trim positions or that's just not the way we approach it, any more than if we buy 100% of a business, we're going to sell it down to 90% or 80%. I mean,
if you follow Warren Buffett or any other successful investor, then one of the most important updates for you on a quarterly basis is the 13F SEC filing. These filings were released last week for the latest quarter, and in it we were able to see Warren Buffett's current stock portfolio, and as a consequence of that, we were able to see every single trade that Warren Buffett had done on behalf of Berkshire Hathaway in the past 3 months. And I'm sure that you've probably seen some news in relation to this, either on YouTube or somewhere else, and a lot of the headlines are covering things such as his purchases of pharmaceutical companies or the fact that he was selling a number of his bank investments. But what I want to talk about today was his action in terms of the biggest investment in Berkshire Hathaway's portfolio, which is Apple Incorporated. Oh, and a few of you in the comments section keep complaining that I don't show my dog enough, so here she is. Here's Lucy, star of the show, and now we can get back to the video. Buffett started buying Apple in 2006, paying just over $25 per share after you account for the recent stock split, investing an initial total of $1 billion into the company. He then continued to buy throughout 2016 and 2017, building a considerable position in the company. Eventually, he invested a total of $35 billion into Apple stock at an average price of $35 per share after we take into account the 4-to-1 stock split that happened earlier this year. And today the stock sits at about $120 per share, which he has nearly tripled, or more than tripled, in fact, his investment over the past 3 years. And since then, Buffett really hasn't made any significant changes to his Apple position since 2017. He hasn't added a considerable amount, and he hasn't reduced a significant amount either. And if we look at 2020 specifically, in Q1, he made no changes up or down to the investment, and in Q2, he did the exact same thing, making no changes up or down, and just letting the Apple investment grow. And this is pretty typical for a Warren Buffett investment. Once he finds a company that he thinks is a really great business, and once he's piled into that business, bought a lot of stock at a price that he thinks is really cheap, after that has taken place, he typically just holds on to his investments. And we've seen this with some of his most long-standing investments. Coca-Cola, for example, and American Express are two examples of businesses that he invested in many, many decades ago. He still holds them, but he really doesn't make any changes to those positions on a quarter-by-quarter basis. However, in the current quarter, Q3 of 2020, Buffett actually did make a change to his Apple investment. During the quarter, which ended September 30th, 2020, Buffett sold 36 million shares of Apple for approximately $3.2 to $4.1 billion. And while $4 billion does sound like a lot, when you compare it to the overall size of Buffett's investment in Apple, it turned out to be just a 3% reduction in the overall position. So to bring it down to more human levels, taking it away from billionaire status, if you had $10,000 invested in Apple stock, this trade would be the equivalent of you selling $300 worth of Apple stock and keeping the remaining $9,700. So because it's such a small part of his overall investment, many people will just shrug this off and say that Warren Buffett is just trimming the position, right? Apple stock is up so much since he invested in it, but particularly this year as well. And as a result, he's selling a little bit to lock in some profits, lock in some of those gains. However, there may be something deeper going on here, because as Buffett said himself just a couple of months ago,
when we sell something, very often it's going to be our entire stake. I mean, we don't trim positions or that's just not the way we approach it, any more than if we buy 100% of a business, we're going to sell it down to 90% or 80%. I mean, if we like a business, we're going to buy as much of it as we can and keep it as long as we can. But when we change our mind, when we change our mind, we don't take half measures or anything of the sort.
So why would it be the case that Warren Buffett wouldn't want to trim a position, right? It seems pretty logical that if a stock has gone up, that you would want to trim some and lock in some profits. So why does Warren Buffett say that he doesn't like to trim positions? Well, if you're a pure value investor, then it actually doesn't make any sense to trim a position. It makes more sense to either be all in on a position, meaning you're willing to put a significant amount of money into it, or you don't want to invest in that business. And this is why, right? If you have a stock in your portfolio and that business changes in some way so that it is now more risky, or maybe it's the case that the stock's price has gone up substantially and it's now overvalued, it really doesn't make any sense to trim that position. It makes more sense to get completely out of it if it's a business that no longer meets your requirements, and then to use that money to then invest in a new business that does meet your requirements of a great business at a great price. As Buffett says in that clip, value investors don't take half measures, right? You want a portfolio of a small number of businesses that you think are really great businesses, purchased at really great prices. And if a business does not meet those requirements, well, first of all, if a business meets those requirements, you should be willing to put a lot of money into it, and you should not be worried about having 10 or 15% or even more of percent of your portfolio invested in a single business. But on the other side of the coin, if the business does not meet those requirements anymore, you should be selling that entire position and looking for a better alternative investment. Now, of course, the obvious question now is whether Warren Buffett is then going to be selling the rest of his Apple stock, or whether he is in fact just trimming a couple of percentage points off the top of his overall Apple position, and then he's just going to leave the rest of the Apple position to grow over time. And I think there's a couple of different possibilities about what is happening here, and while of course we cannot possibly predict what is going to happen, I think it's fun to explore the different possibilities and look at patterns that we've seen in the past from Berkshire Hathaway's portfolio so that we can make some predictions about what may happen in the future. So the first possibility is of course that Buffett is not trimming this position, but in fact he is starting to sell the entire position in Apple. This wouldn't be the first time that we've seen Berkshire Hathaway sell a couple of percent of a business and then go on to sell the remainder of that investment. In fact, we saw it just a few months ago with the airlines. So some of you may remember that at the beginning of the year, an SEC filing came out where Warren Buffett was declaring that he had sold a couple of percentage points out of all four major airlines, that he had about 10 or 11% ownership in each of them. And at the time when that filing came out, everyone was speculating as to whether he was just trimming those positions, taking 1 or 2% off, or whether in fact he was actually in the process of selling the entire position. And then about a month later, the 13F filing came out for that quarter, and we found out that he was not trimming that position. He actually sold out 100% of all four major airlines. So if this is the case with Apple stock, first of all, we won't find out officially whether he is doing this until February of next year, February 2021, because that's when the next 13F filing will come out. However, in the meantime, if he is going to be selling upward of $80 billion worth of Apple stock, then we will likely see that reflected in the stock price of Apple, either staying flat over the next few months or declining over the next few months. Now, personally, I don't think this is the most likely outcome. I think it's very unlikely that he is selling out of his position. And the reason why is, first of all, I don't think anything fundamentally has changed with Apple over the past few months. When it came to the airlines, something had actually fundamentally changed. So it was a very different situation. With Apple, I don't think that's the case. And I do think Apple is overvalued. However, Warren Buffett more recently over the past couple of decades has been less inclined to sell overvalued businesses, but rather just hold on to them if they are great businesses, because it's really, really challenging to get in and out, and it's very costly to shareholders to get in and out of investments as they fluctuate from being undervalued to overvalued. So if he thinks Apple is still a great business, even if it's overvalued, it's likely that he would hold on to that position as he has with some of his other businesses in the portfolio. And the other bit of evidence that suggests to me that this is probably actually just a trimming and is not him selling all of the stock is that he has trimmed Apple position before. In Q4 of 2019, so not even a year ago, he sold about 15 million shares of Apple stock. And that was about 1% of the portfolio, or 1% of the Apple position at the time. And it represented about half as much as he sold in this quarter. So it's not the first time that he has trimmed Apple stock. He doesn't do it very often. I think that was the only other quarter that he had trimmed since he was investing in it. But he has done that in the past. The second possibility around what is happening with Apple stock here is that it might have been one of the other money managers at Berkshire Hathaway that made this trade and not Charlie Munger or Warren Buffett. Warren Buffett and Charlie Munger pass off some of their investment decisions to Ted Weschler and Todd Combs, so it is entirely possible that one of those managers were the person behind the trade that sold a little bit of Apple stock. Now, there's no evidence of this at the moment. Usually we find out whether this is the case through Warren Buffett doing some kind of interview, or one of the Berkshire Hathaway money managers doing an interview for a paper or for a television network. So maybe through one of those means we will find out if that is the case, but at the moment it's pure speculation, and all we know is that it could be a possibility that that is what happened. And the third and final possibility is just that Warren Buffett trimmed his Apple position, even though a few months ago he said that he doesn't trim his positions. So I think even though just a couple of months ago he said that he doesn't trim positions, he doesn't do half measures, I think this is probably the most likely outcome. And the reason why is because Warren Buffett has changed his tune on a lot of things that he said in the past, particularly in this year. So even just to name a couple, just off the top of my head, he invested in a gold miner after saying that he does not like investing in gold. And I know that a gold miner isn't just buying gold, but it's more or less the same thing. What's the competitive advantage of a business that's selling the same thing as the person next to him? He invested most recently in highly complex pharmaceutical businesses for the first time. That's another uncharacteristic thing that Warren Buffett has done recently. And I think the most interesting is that he was a net seller during the biggest crash that we've seen in 10 years. A 38% drop in a couple of weeks, and he was a net seller of shares. Now, these are some of the things that all go against things that Warren Buffett has said in the past. So it would not surprise me at all for Warren Buffett in March to say we don't trim positions, and then in September for him to trim Apple as a stock. Now, the last thing that I just wanted to add in this video is, even though I don't think Warren Buffett is selling out of the business, personally, I do think that Apple stock is crazy overvalued, and that you have to put some very, very high expectations on the business going from here onward for you to outperform the market buying Apple stock, which should be your goal. If you're buying an individual business, it should be because you think it will do better than the market. If you don't think it will do better than the market, then just buy the market, right? The only reason you would buy an individual stock is because you think it can do better. So if we just look at some very, very basic numbers for Apple, currently the price for Apple on a whole business basis is about $2 trillion, right? So $2 trillion is what you would pay if you bought the whole company. And this is the way that I like to look at investing, because you can look at it on a per share basis, but it makes more sense to look at it as if you're buying the whole business. So if we're buying the whole business for $2 billion, and we want to make a 15% per year return over the next 10 years, 15% per year over 10 years means that we want to 4 times our investment. We want to turn $1 into $4, or in Apple's case, if we're buying the whole company for $2 trillion, we want to be able to sell it for at least $8 trillion in 10 years' time. So that means that Apple's stock would need to reach a market capitalization, a price for the whole business, of $8 trillion by 2030. And if we then apply an average market price to earnings ratio of 15, so assuming that the market is willing to pay the average across businesses in the S&P 500 across time, then that would mean that the business would need earnings of over $500 billion. So Apple would need to be producing $500 billion worth of profit by the year 2030. And that is massively higher than their current earnings, their current profits, which are about $58 billion. Now, I'm certainly not saying that these assumptions are impossible, but they're a bit of a reach, right? It's a big expectation to expect 8 to 10 times of an increase in their profits over the next 10 years for a business of that size just to make a 15% return. It's a big ask. There are much better businesses where you can make much lower assumptions and get to a 15% long-term return because the business is not as attractive at the moment. I'm thinking about businesses in industries that are suffering at the moment. People are not interested in those businesses, but finding the businesses in those struggling industries that are going to thrive once we come out of this pandemic. Also, if you want to catch the other trades that Warren Buffett and Berkshire Hathaway have made in the past 3 months, then I highly recommend you check out Brandon's video on the New Money YouTube channel. I'll leave his video linked down in the description below. It's a great video, and he goes through all of the biggest trades that were made by Warren Buffett in the latest 13F filing. And of course, I will be covering more of these 13F filings over the next couple of weeks. So if you want to get up to date with those 13Fs, then the best thing you can do is be subscribed, hit that subscribe button, and also hit the notification bell icon next to it. Make sure you have all notifications turned on, and that way you will be notified when I am posting a new video. You can expect the next one to be coming out in a couple of days. So you can look forward to that. But for now, hope you guys have a great day, and I'll see you in the next video.